The Global Banking Playbook, a guide to offshore account opening. 1. Defining offshore banking. An offshore bank account is one established by a non-resident individual or entity in a jurisdiction other than their country of residence. Despite popular misinformation, Canada and Germany are not considered offshore jurisdictions. True offshore financial centers, such as Switzerland, Singapore, the Channel Islands, and the UAE, cater specifically to foreign clients by offering a wide range of financial services and asset protection tools. Footnote: offshore banking refers strictly to accounts held by non-residents in jurisdictions that accommodate foreign clients with specialized financial services. 2. Why bank offshore? There are two primary motivations. First, offshore accounts provide diversification, geopolitical insulation, foreign currency access, and banking continuity in the event of domestic disruptions. Second, they offer jurisdictional arbitrage benefits, enabling tax optimization, estate planning advantages, and enhanced wealth preservation through strategic placement of capital and accounts. For instance, a Swiss bank account might book deposits in the UAE to avoid Switzerland's 35% withholding tax, because even the Swiss dislike paying Swiss taxes. Footnote: offshore accounts serve both defensive, asset protection, and offensive, tax and return optimization, financial strategies. 3. Who can bank offshore? Almost everyone, except individuals from sanctioned or blacklisted countries, can legally open offshore accounts. Requirements vary, but usually include a deposit threshold, ID verification, and a rational business or personal justification. Being a fan of James Bond does not qualify, but a stable income or international business might. Footnote: eligibility for offshore banking is broad, provided legal and financial transparency is observed. 4. Where to bank offshore? Jurisdictions fall into tiers. Top-tier private banking hubs include Switzerland, Liechtenstein, Luxembourg, and Monaco, generally requiring deposits of $500,000 or more. Mid-tier options with premier banking access include the UAE, Singapore, and the Channel Islands. Lower deposit options, $25,000, $100,000, include Panama, select U.S. banks, and parts of the Caribbean. Beware, not all offshore banks are equal. Some provide robust regulatory frameworks, others struggle to spell compliance. Footnote: the quality of offshore banking depends more on jurisdictional governance and banking standards than postcard views. 5. Step 1. Country selection. Country selection hinges on three questions. 1. How much can you deposit? 2. What are your goals, asset protection, corporate strategy, investment diversification? 3. Where can you prove economic ties or satisfy KYC, know your customer, and AML, anti-money laundering, requirements? For example, if your deposit is $25,000, Switzerland is out, but Panama or Singapore might still welcome you, with open arms and compliance forms. Footnote: effective country selection is based on balancing deposit thresholds, strategic goals, and regulatory eligibility. 6. Step 2. Bank selection. Choose a bank based on 7 factors: regulatory stability, compliance culture, reputation, client service, product offerings, legal compatibility, and, critically, the bank's preferred client profile. Many banks quietly restrict clients based on citizenship, industry, or transaction behavior. Trying to open a Swiss account as a cash-intensive crypto miner from a sanctioned country? Good luck! Footnote: a mismatch between your profile and a bank's desired client base guarantees rejection faster than a botched Tinder date. 7. Step 3. Application process. Applications begin with a video call, followed by submission of documents, passport, proof of address, tax ID, etc. Complexity depends on your profile. High net worth clients may need to submit audited financials. Most banks require an initial deposit before finalizing approval. The fastest route? Use a specialist or agency familiar with bank preferences, shaving weeks off the process. Footnote: Offshore bank applications are standardized in concept but vary wildly in execution. Professional guidance can expedite success. 8. Accelerated access, the free assessment method. To simplify the process, reputable services offer pre-screening assessments. Fill out a form, receive a tailored list of compatible banks, and open accounts within 5 to 15 business days. This method prevents wasted time applying to institutions that don't serve your profile. It's like dating, better to know upfront if you're not their type. Footnote: Streamlined onboarding via expert screening ensures a match between applicant profile and bank receptivity.